Ladies and gentlemen, please get seated. The next session is about to start. The next speaker is Juraj Bednár, one of the founding members of Paralelní Polis here in Prague, and one of the founders of Paralelná Polis in Bratislava. Crypto anarchist, biohacker, and today he's going to tell you about crypto utopia and how to achieve your freedom, and he will tell you about his experience from life and so on. So I'm giving floor to Juraj.
Okay. So thank you for coming. I know that there is a great competition of talks here, so thank you for choosing this one. So basically, when I was a bit younger, I was reading books about offshore banking and how to start an offshore company and these tax havens and tax paradises and exotic locations where you could move your assets and become invisible. And it was kind of, for me, like a romantic novel about entrepreneurship and that you can do all these fuzzy, shady, but interesting things. And it was very adventurous. After some time, I realized that all these stories are no longer possible, at least not in a way that they used to be. So if you read a book about how to move your assets to an offshore tax haven from the 1990s or early 2000s, they're describing reality that is no longer here. And in a sense, it's a bad thing, and I will try to convince you that it's also a good thing. So in order to do that, I'm going to talk a little bit about financial surveillance, but not in a sense, okay, we live in this bad world and everyone is surveilling us and it's a tough life and, you know, let's get depressed. I see financial regulations and regulations in general as an inspiration for decentralization. What I mean by that is that, for example, in the early days of internet, people started to share files. So the first versions of sharing files were Usenet and FTP servers, and we were just going around and downloading MP3s and books and games and everything. And then someone started to be concerned. There were some lawsuits, some threats, and people had to react. So at first they decentralized the sharing of the links. So it started spread on the forums. So no one was actually hosting it. People were just uploading it to FTP servers that allowed public uploads. Then they were going after the forum administrators. So people created peer-to-peer sharing systems like Napster. And then moved to BitTorrent, and BitTorrent decentralized with magnet links and decentralized trackers and so on. So what I mean by that the reason that we have BitTorrent now and we can share files in a very decentralized way, and it actually stands up to like heavy censorship, like for example Cody Wilson's project with 3D printed gun. It's a file that can spread and they were not able to ban it. And the only reason is that they tried and the community reacted and created a solution for that. So that's how I view financial surveillance. There are these steps that they are making to make life hard for us. And the crypto community reacts and creates solution for that. So I will just very fast go through some parts of the financial surveillance system, and then I will show you what we have here and how we use crypto in order to kind of use these new technologies that were created as a reaction to this censorship and surveillance and so on. So first, when you are talking about surveillance, there are two major ones, and that is targeted and mass surveillance. So targeted surveillance was possible like all the time, basically, if if a bank got a court order, they could disclose all your information. What we are moving towards is mass surveillance. That is, the states, the tax offices are collecting all the information automatically now. I will tell you about that as well in a while. But for example, the difference is between hacking your device, so targeted, you are a suspect that you are a terrorist or a drug dealer or anything else, and they hack your particular device. So that's targeted surveillance. And then there's mass surveillance, so they're recording all the traffic on all the network, saving it and trying to, and then they will use it later against you. Also, there's archivation. In the financial sector, data retention is the norm, like the movements and balances of your bank accounts are kept for a long time and you cannot delete it. So data retention is something new in other fields, but in banking and finance, that's been always the case. What is very important is that what also tells a story about you is derived data. So it's not only about the recording on what you do, but now we have algorithms, machine learning algorithms that can actually tell, I don't know, Juraj is a libertarian, but not because I've wrote somewhere that I'm a libertarian, but because of the articles I share, because of the people I talk to. So this is especially dangerous because you don't know who has derived data on you. You give some data to Facebook, but the ad networks that are connected to Facebook, they have much more data about you, and you don't know even that they exist, and they still collect data. And then there's denial of service. So, for example, you are trying to send 20,000 euros to Panama, and it doesn't go through because you know, they suspect that it's money laundering, or you couldn't explain where you got the money from, and so on. So the service doesn't work as advertised because someone censors the transaction. Another example would be censoring transaction to WikiLeaks, for example. And then you can have a problem with access to particular bank. So that happened in Slovakia this year, that banks started closing down bank accounts of companies that were doing business related to cryptocurrencies. So they would not serve you. So they would not open a bank account for you, and if you had one, they would close it. And then another problem that happens to some people, and it's a real thing I will show you, is you are denied access to whole banking infrastructure. So you are denied access to the network itself. So you won't be able to open account in any bank. So these are things I want to tell you about. Mass surveillance, just very quickly. FATCA is an American crazy law that they I think it was a very smart move from their end that basically ended banking secrecy. And what it did is that people from all around the world have to file paperwork with the IRS. So even though I have nothing to do with America, when I want to open a bank account in Liechtenstein or Hungary or wherever, they give me this form from the American IRS, and I have to fill it, and I have to declare that I have no interest in America, I should not pay taxes there, and so on. Of course, America had this great thing, so other countries got inspired, and they created something called OECD CRS, Common Reporting Standard, which is basically the same thing, or actually a little bit worse. Don't get misled by OECD. It's not only OECD countries. Actually, almost all countries, except for a few coconut countries and the US, are under this system. And what it does is that the banks, financial institutions, crypto exchanges, by the way, they have to report your balances at the end of the year to your tax office, where you are tax resident. So if you open a bank account and you declare that you are a tax resident of Czech Republic, and you open a bank account in, I don't know, St. Vincent, the St. Vincent Bank, at the end of the year, they will send a report to Czech tax office with saying, this person is your tax resident, they have an account with us, and the balance is 100,000 US dollars. So this now happens automatically every year. By the way, that's one of the reasons why I think that the price of Bitcoin goes up at the end of the year for a few years, because when people buy crypto, they don't have balance. So the report says a very nice zero, and then they sell it in January and refill their bank account. So just a theory. Also, what used to be true in those nice stories that I read, that you could hack all this by having a nominee owner, which would be like a person who would pretend that they own the account, but you would be the ultimate owner of the account. Now that is very hard to do, and it's actually fraud. All the banks want to know the ultimate beneficiary owner, and they have to sign a paper that they're not being nominee director for or nominee owner of the account. And it's very hard to go around it, because if they lie in this statement, they actually commit fraud, so they could go to jail. So nominee directors and nominee owners don't want to really do that. So usually the bank knows who you are. Even if you start an offshore shell company, they still want to know who really owns the company. Of course, you can bribe a homeless guy that has nothing to lose with, 10 bottles of vodka. It might work, but it's not easy, definitely. All right, so this is mass surveillance. All the account holders of all the bank accounts all around the world get reported. If you are not American resident, then it is very funny, because the only country where they wouldn't report is the US, which is funny because they created this offshore tax haven for everyone. So actually Puerto Rico might be a good destination if you want to avoid it, but thankfully we have cryptocurrencies, so it's even better. AML and KYC, very quickly. KYC means that the institution, including bank, but also companies that rent property and people who provide loans and so on, need to know who is the actual identity of the person that is buying the service. And they also check with a reputation database. Many people don't know about it. For example, Thomson Reuters has a database called WorldCheck, which basically harvests information from reputable sources like tabloid media. So please don't get drunk with a politician, because then a bank wouldn't open a bank account for you, because the tabloid wrote that you have a relationship with them. For example, we have a friend who moved to Malaysia, and he was a technical advisor to an ICO. They had his name on his webpage. He didn't even get the tokens as a reward. He was just an advisor for free. And the Malaysian bank said that they're not opening a bank account for either him or his company, because they found him in a database of ICO advisors. So that picture and fame on the coolest ICO has its cost, so beware. Anti-money laundering, so that's censorship of transactions. If you want to transfer large sums of money abroad, they will want to know where you got the money from, what are you paying for, what is the contract, they want to see the invoice. And it's painful and long process, and believe me, you don't want to do that. It's very frustrating when some bank clerk wants to know why you are sending someone money, and you have to explain what you are doing with your own money, which is really degrading, I think. And also, by the end of the year, there is something called AML5 regulation in the EU, where online custodial crypto wallets will have to do AML as well and KYC. So, so it's going to crypto, but we can avoid it. With credit cards, there is first credit history and credit rating agencies. So they have to know a lot about you. And there are several other institutions in this. I'm not going to go through it, but these are the actors in the process of paying with your credit card. So all these guys know what you are buying, where you are buying it, how much you're paying, where you are because you're paying at physical stores. And all this information is stored in various databases, and it's enough if one of them leaks. So do they send you an unencrypted credit card bill via email, or your bank gets hacked, or the acquire bank, so you're paying in Cambodia with a credit card for food, and the acquirer on the Cambodian side gets hacked, and they have all your information from about the transaction. There are many other institutions that have access information and access power over the network. So one of them is SWIFT, which is a information routing for international payments. They don't actually do the payments themselves. They only have all the information, which can probably leak. There are central banks. So if you are sending a US dollar amount, in most cases, the transaction will go through FAT. Even if you send US dollars from Czech Republic to Cambodia, usually if it's a US dollar transaction, it will go to a corresponding bank which has an account in FAT, and they will know about this and they can stop it. Tax offices, of course. There are VAT reports in the European Union. There's electronic submission of transactions in all Czech Republic except Paralelná Polis, where we don't do that. There's financial police. They get spammed by information about suspicious transactions, and the banks, they want to play it safe, so they report much more than they have to. So the financial police, which are these guys, they don't earn a lot of money, and they get these reports and they can leak them sometimes. And of course, governments, they can confiscate money, they can do monetary reform to destroy all your wealth. Welcome to Venezuela, for example, inflation, business cycle, and so on. So we have all these organizations that can steal money from us, they can know about our private information, they can censor transactions, and it's horrible. So it's all about the networks. So the most important thing is that if you cannot be part of a transaction network, it's as if you couldn't use money. It's like it doesn't matter if you have money. What matters if you can use it. If you are part of a network and you can transact with it, and the other party can accept it. The World Bank recommends that countries start introducing negative interest rates, and in order to do that, they need to ban cash or severely limit it. We already see it in EU. For example, in Slovakia, where I live, the maximum amount of cash transaction is 5,000 euros. Everything about that is illegal. In France, it's even lower. So this is happening. The first reason is cash is quite anonymous, or at least pseudonymous. They see your face if you're paying cash. But the other problem is if you want to have negative interest rates, you would not keep your money in a bank if you will pay 5% per year just to store it there. So you would say, okay, I'm not stupid, I will just withdraw cash, put it in my pillow or under my bed, and then no negative interest rate. So it's actually required for the negative interest rates to work. So there's a problem with limiting access to the network. We have seen that with credit cards and WikiLeaks. You couldn't donate to WikiLeaks with a credit card. You can have a problem if a bank doesn't open a bank account for you. Companies that have anything to do with crypto in many European countries, including Czech Republic, Slovakia, Spain, Poland, UK, have been denied access to the payment networks. So they said, okay, you can be registered business, you're not doing anything wrong, we just don't want you as a client in our bank. And then they lose access to this banking relationship and they cannot use this network. So that is why in crypto we are emphasizing the network effects, and we say that the most, at least I do say that the most important thing in crypto is the size of the network. How many people you can transact with using the cryptocurrency that you have. So now what you can do against this, so all of these horrible things shape what we create in the, as a cypherpunks and as crypto anarchists. So we can try to do offshore. That's one option. We can also run companies only on cryptocurrencies. Welcome to Paralelná Polis. I don't know if you know, but this place is also run on cryptocurrencies, also internally. So employees, paper hub members, all transactions are in crypto. So we try to use fiat as little as possible. You can also get access to the networks and both ways actually by using decentralized exchanges like BISC, AtruDelta and Oasis and other ones. You can use stablecoins to use blockchain to transfer what I call crypto fiat. I will tell you a little bit more about that. You can start playing with creating your own financial derivatives and products, which I will also show you. And thanks to governments, we are all able to increase the value proposition of crypto. So the reason that crypto is so valuable, the reason we pay $100 for Monero or $6,000 for Bitcoin is that it allows us to have a better experience with accessing the network and getting privacy and avoiding all of this bullshit that I just talked about. So how do you do that? So we try to decentralize Paralelná Polis. So we opened Paralelná Polis, which is in Bratislava, and it's the name in Slovak language. This is a render, but it looks pretty much like that, except for the flowers and the sign. And we started doing it, and we are using some strategies on how you can run everything on crypto. A good thing about Paralelná Polis here was that it was a place that was almost ready to go. So we just had to make some furniture, buy some furniture, but we didn't need to do any like large renovation or anything like that. It was unfortunately not the case in Bratislava, so we had to do like larger scale financing in the beginning. But still, the transactions are in crypto. So if you talk to people and you say, okay, I have a business and I run purely on cryptocurrencies, they said, no, it's not possible. You cannot do economical calculation because you would go bankrupt, because you would receive a payment, then crypto goes down, and then there goes your margin and something more even, and then basically it's not possible to run a business on a volatile cryptocurrency. I thought the same thing, so that's why we tried it out, and we had to figure out how to do it, because otherwise we would go bankrupt, and that's not what we wanted to do. So this one, maybe if you have seen my previous talk from last year, might be familiar to you. So just quickly. So first two strategies that we use for operation is the short and long accounting intervals. So how do you survive this volatility? So for short term, someone buys a coffee. We have a cost on that coffee, which is barista, coffee beans, electricity for the coffee machine, and a few other things. We have profit, hopefully someday, but it's written there, so wishful thinking. And we have a part that goes to a capital fund, which is which is just a budget of money that we use to do capital expenses, so buying new furniture and so on. So for cost, you want to do as short accounting intervals as possible. Why? Because if you pay the barista the same day as when he makes coffee, or she, the volatility is not so high. So it's up to the barista what they do with the crypto. But if the exchange rate of, let's say, Bitcoin is 5,600 euros, we get the money at that exchange rate and we pay the barista approximately with the same exchange rate, because the intraday volatility during the day is not that high. So paying suppliers as soon as possible and have as short accounting intervals as possible. With a capital fund, you do the exact opposite. So you remember the exchange rate of the money as it was getting into the capital fund, and you only spend it if the value is 30% more or 20%, depends on how you set the number. So that reduces your time flexibility because you don't know when you can spend the money. But if you do, your capital expenses are 30% lower than competition, or if you were using fiat. So with this, for operation, you don't have problem with volatility because of the short accounting intervals, it was gone. And you can actually have cheaper costs of capital because of the strategy for the capital fund. By the way, you can also use this strategy for your own personal finances. So if you create a capital fund for going to Bali for vacation, you can say, okay, I don't know when I go to Bali, but I save 50 euros or I don't know how many Czech crowns every month. And when the amount is higher, let's say 30% higher than what you put in, then you spend it and go to Bali. So you got just a 30% discount on your vacation. So you can use it in your own life. For the short accounting intervals, how you can use it, it's a strategy by Karel Filner who we really like. And the strategy is that he doesn't want to spend his Litecoins here for coffee. So he spends Litecoin, buys a coffee here, but then he immediately buys new Litecoin at the same exchange rate. So he's basically cheating us and he's paying with fiat, but on blockchain. But that works as a personal strategy. Okay, so this is all good if you have a space that already operates. One other strategy that actually I like to promote crypto as something that can make you richer and your life more pleasant. So the one I like is using Purse.io, which is basically a secondary market with Amazon gift cards. Long story short, you can order anything on Amazon UK and com, and except Kindle books, and have a 15 to 30% discount. Also, you trade the time factor, so you don't know when someone accepts the order. But if you're willing to wait 1 or 2 weeks, you can save 30% on anything on Amazon, which is great, and I like people to save money. So please look it up, use it, save money. What I do is, of course, the exchange rate is fixed when the other party accepts the order. And of course, they do it when it's not good for me. So I buy crypto back. So I actually don't spend crypto using this. So if I order something and someone accepts the order, I immediately buy crypto back, the same amount of crypto. So I don't lose my precious crypto. Okay. So in Paralelná Polis Bratislava, we had this problem. We have raised most of our money at the beginning of the year, so January, February, March. And then the crypto market crashed to 1/3 or 1/2, depending on when we got the money. So we ended up with a situation in January, we had enough money to build the whole thing, and now we only had half or 1/3 of the money that we needed. And of course, we didn't want to sell the crypto because we hope it will go up and to the moon. So we decided that we are going to look for alternatives, and the alternative is how you can use the crypto, keep the construction going, pay the companies that are supplying it, buy the dishwasher and all these things, but not lose the upside of crypto. So we asked around in the community if there are people who are willing to loan us some fiat, which we use to pay for all these things. Of course, we are a non-profit with really no other assets than crypto. So we use the crypto as a collateral. So we're keeping the upside, and we can actually build a space. Also note that the bank wouldn't really work because they don't. Mortgages usually don't take crypto as collateral. I don't know why. It's much safer than real estate, but yeah. So this is how we financed part of the building. And we didn't have to sell the crypto. But then we kind of people in the community were out of fiat because everyone is holding crypto and buying more and so on. So we had several options. We could find more funding. We are still looking for funding. Please send us money. Thank you. We could sell crypto, which is a big no, because when you're sending it out, it hurts, especially at this exchange rate. So no. We could apply for some scam scheme of European Union or some state subsidy. Doesn't work for Parallel Polis. We could do an ICO, which we are too lazy to do, frankly. Or we could be jerks and not pay suppliers invoices and steal a dishwasher somewhere because we still don't have it. And this is a great idea when you are in Parallel Polis and you are in a very elevated mood and there's an idea that comes to your mind. Let's print some money. Why not? And usually people think that only central banks and commercial banks and people with licenses can print money. But it's actually not the case. So we found a way how you can print money and without an ICO. And so we decided we will print US dollars because that's what we now can do. Welcome to the future. And we will actually print US dollars that are backed by cryptocurrencies. So even better fiat than normal fiat. So not backed by some weird, state bonds or other shitty assets. So we are going to create high quality fiat. And the way we do it is that we use a project called DAI, which is a stablecoin. It's backed by collateral of Ether. And it's created, it's printed. When you lock in Ether as a collateral with at least 100% of value, if it goes to 150% or less, it is sold on the market, so you don't want that to happen. But this new DAI is created. One DAI is $1. There are market ways how they hold the peg, but the peg is not important with us. So what we did is we locked some Ether in this smart contract, printed DAI, and we spent DAI to pay for all the invoices and so on. So this is how it works, and it actually makes sense. So what you can do if you want to print some money, here's a quick guide. You lock at least 150% of DAI value plus some access to prevent liquidation if Ether crashes. So I recommend 200% or more, 250. You create new DAI, it is sent to your wallet. You sell it for Bitcoin and euros, you withdraw and you spend it for whatever you want. Another way to do it is, which I call the hodl hard, is you print the DAI, but then you just sell it for another crypto, Bitcoin, Ether, whatever you want. If you do it with Ether, you can just fund the collateral debt position again and print some more. Of course, you will still print less and less because the collateral is excess. But you are gaining the upside of more Ether than you had in the beginning, or you can have some Ether upside and some Bitcoin upside. So you can print money to buy crypto, which is even better than just printing money. And our strategy. So our problem is that we don't want to lock excess collateral. We need 100% of that because we need money to buy the dishwasher. So we find someone else who is willing to put the other part of the collateral. So 100% and 100% of minted DAI will be 200%. One is supplied by Paralelná Polis, one is supplied by some other person who does it and will earn profit on it. So we lock it, we mint the DAI coins, we convert it back to crypto, so we can convert crypto to fiat. It's some magic, you know, with exchanges, you do all these things. You end up with a bunch of cash, you pay the suppliers, buy a dishwasher, be happy. And then wait. You wait, you either make some profit on it, because if the price of Ether goes up, then it's great. The other thing that could happen is that the collateral is liquidated, and that is the same as if we sold the Ether in the first place. Of course, the other person that put the other part of the collateral shares some part of the profit. So this is how it works. So we have two entities. A is Paralelná Polis Bratislava, B is someone else who puts in Ether. They put in the same amount, we mint new DAI, we spend it, and when Ether goes to the moon, we of course need to buy DAI to return it and get the Ether back, so that part is destroyed. B receives Ether, so that's the amount of Ether they put in, plus they receive a share of the upside on the Ether in the other part, and Paralelná Polis receives the other share. So it's a complicated scheme. You can think about it a little bit more later, but this works for us. Benefits, as our other reasonable option, you mean except for the EU grant schemes and stealing dishwashers, is selling crypto. We avoided this option, so we are kind of happy that we can have our beautiful space and still have some upside of the crypto. If it goes down, we lose collateral, so it's same as selling crypto. You know, we are selling hipster flat whites and the dishwasher is washing the cups and everything is fine, so we are not as set. And if it goes up, we just split the profit with the other hodler. So thanks to our amazing community, thanks to all these weird, you know, mind games and printing money, we were able to build a space which we will open in 2 weeks. There are already events happening. There will be a grand opening at the end of the year. Another moral of the story is that for anyone who had this great idea to raise money in crypto in January, it was not such a good idea. We tried our two strategies for short and long accounting intervals. That works. We made some home-baked collateralized loans, which is funny because you are creating, you know, these agreements with people over email, and you're basically making financial derivatives. So it's almost like a bank, and you just can do it with email and a few hardware wallets. We have a cheap financing through DAI by printing money that is backed by real crypto, which is even better fiat, and still keep some crypto upside. Just one thing, and then we can go to question, is my short rant about stability. So we don't, so DAI is stablecoin, so it's pegged 1-to-1 to US dollar, but we don't actually use this feature. So we print it and we immediately either spend it or you can buy another crypto with it. So it's not our use case to, you know, have crypto dollars. We could do that definitely. A lot of people say, what if the peg breaks? I think if the peg breaks, it will break, meaning that DAI will be 0.8 or 0.6 or something US dollars, which is great for us because we can repay the loan and get our Ether back for less money. So we actually don't need the peg to hold. We are fine if it breaks. And I think that by thinking about crypto in this way, about running your business on crypto and navigating capitally intensive project and cash flow intensive project with a volatile currency as a base transactional currency, we are kind of losing the idea of, oh, there's some stable unit of account and everything is, you know, magical and the milk costs the same today and tomorrow, and we just don't count on it. Count on this this, let's say, what some people consider the fact of life. And it made me start thinking if we actually have a real stability in the world, if we are not just thinking that the euro or Czech crown is stable, because the prices change all the time, and it's just a feature of the world that an apple in September is different than apple in January, because, you know, there's weather and there's demand and supply. So this all made me personally think that we don't need to focus so much on stability. There is no such thing as stability in the world, and it is better idea to think about what we can, how we can thrive in a world that is not stable, and if we can use this fact for our own advantage, it's even better. So please consider alternative strategies. You know, stop fixating on, you know, $100 is $100, because $100 today buys you more than $100 a year later, thanks to inflation. By the way, we are creating the inflation if we print DAI. Sorry, governments. So that's all from me, and I'm happy to answer any questions that you might have.
Thanks a lot. If you have questions, raise your hand and I will give you a microphone. No questions? Oh yeah.
Okay, thank you for presentation, Juraj. I have a question about relationship between DAI and collateral. Do you have any kind of contract, I mean real world contract or smart contract, ensuring what the investors who hodl with you will get the collateral back if the idea will drops, if something goes wrong? So who ensures investors will gain their part of collateral if everything fails?
Yes. As the other party is a member of a community, we made a private agreement. We actually signed it and also published it in the blockchain. So it says this is what we agreed on. And the collateral is actually held by the keys to the collateral, to the smart contract, are held by the other party because they have a higher upside. If you see B holds much more Ether, so it makes sense that the B party holds the keys. But it's a member of the community, and we try to use more members of the community. So that's how we do it. Unfortunately, the way that CDP smart contracts works, you cannot do any multisig. You cannot even embed a different smart contract that would enforce the rules in any different way. That's how DAI is made. So basically, there has to be one key that can access the collateral. So that's how we do it. But we didn't look for B, you know, on the dark web or like with hodlers that we don't know. So everyone knows who are those people who hold the keys. So The worst case would be that we just spend the DAI and don't get upside. So that's also not as bad if you diversify the bees. So that's how we currently do it. It's all very home-baked, you know. It's it all looks very sophisticated, but it's really, you know, a guy sends email to another guy. We made an agreement, you know, we vote that it's good for Paralelná Polis, and then we just do it. So it's like you cannot. Actually, the whole scheme we created it. It took us less than a week because we were like, shit, we need like 9,000 euros now to pay for all the stuff, and we need to like make something now. So we couldn't, you know, sit down and program and think about how we're going to do it. It was like really a fast process. So we really baked it. The contract is, you know, written down, typed by a person, and it's written like in this simple math. So that's how we do it. It's dumb contract, very dumb.
Sorry, just a simple question. I didn't understand, what is a DAI? Like, what do I get? What's the incentive to buy a DAI? What do you actually...
DAI is a cryptocurrency similar to Tether, but it's decentralized, and there are market mechanisms that keep the price at $1. So why would you use it?
I buy a Tether because I want to hedge, right? What's my incentive to buy a DAI?
If you want to send $100,000 from America to the US, you can send it in envelopes.
Right.
You can.
So it's tied to the dollar.
It's tied to US dollar, so it's 1-to-1 to US dollar. So if you ever want to transfer large amounts of US dollars, you can do it using DAI. We don't use it this way, but that's the incentive. And also, if the peg doesn't hold, there are arbitrage opportunities, so everyone can make money if the peg doesn't hold. So that's another way that people make money on DAI, is that they either enter the auction of the collateral that's less than 150%, and the other thing is that people do arbitrage between different or among different cryptocurrency exchanges, or if enough people believe that it should be $1 and it goes down, then it makes sense to buy it, wait for a moment, and sell it for $1. So that's the incentive.
We still have time for like 1 or 2 short questions. Nobody?
Please come visit us to Bratislava.
I have a question.
Yes.
I'm surprised to see you talking about getting the upside from Ethereum when in the past you mostly preferred Bitcoin, or you still prefer Bitcoin. So now you believe that Ethereum will go up eventually, or?
I think that all cryptos are quite correlated. So I think if there's Bitcoin upside, there will be Ethereum upside. And we are actually talking about it quite a lot. And we all said, okay, we would prefer to hold Bitcoin, but we cannot. Like, our only option is either to sell it or figure out something else. So we would rather have an upside from Ethereum than nothing. So it's like, I actually, if so the DAI project or MakerDAO, they are now working on something that is called multi-collateralized DAI, in which you can use any token as a collateral. It's right now running on testnet. It's very interesting because the smart contract is formally verified, which is very uncommon for Ethereum smart contracts. And if someone creates a representation of Bitcoin, maybe similar to Rootstock, on Ethereum network, you could actually hold Bitcoin. And I would prefer holding Bitcoin to Ether anytime, but you know, you do what you can. So I believe Ethereum has an upside, and I hope that we will get it, but anything could happen. The position could get liquidated, and we still have a dishwasher. So that's.
Yeah, thanks a lot. I wasn't looking for financial advice, just an explanation of how you think.
Well, my financial advice would turn out very wrong because our financial idea was to raise money in January and keep it in Bitcoin, and it was a stupid idea. So please, if you think I'm giving financial advice, do the opposite, because I'm always wrong.
All right. Thank you very much for the talk.
Thank you.
We still have 2 more sessions today. I think that we still have something here in 10 minutes. And it will be Austin Craig, how cryptocurrency helped the starfish beat the spider. And don't forget that from 8